Hello. Hello, good morning. Welcome to another ESP to Australian stream. Today is Wednesday, December 13th. It is 9:10 a.m. Eastern Time in the US. This is your host Victor, streaming from Atlanta. Let's take a look at what the market is doing. I apologize for the dog. Come on, doggy. Let me check what's going on with the dog, please. Just a moment. Hey. I don't know what's going on. All right. We can see here the monthly time frame. Now we can have, this is a really an impressive rally that we have had. 14% gains in just pretty much in 1 month. And the market has took this range, 1, 2, 3, 4 months range, this range that was forming, right? Along with this one. And that leaves only the all-time high as the next reference to monitor for upside continuation. Right now, we are just into the second week, actually third week of the month. The first week had only 1 day. It's a very weird month as well. But the main thing, the market is trending higher, right? Looking, exploring above this high, above this range here. Now notice that there is a range here as well. Let the market look above, come back, was rejected. First, another rejection here, and now trending higher. The monthly, the weekly, also has been trending for the past 1, 2, 3, 6, almost 8 weeks now. We have a steady trend here. 14% gains here. We have basically 2 references in the upper side to monitor here, and a range that was formed here, right? Kind of like 2 distributions in the weekly, one down here, another one here. The feeling that happened here, rejection, once the market penetrated inside this range, there was a rejection. Oh my god, that dog. Gosh, what's going on with that dog? I don't know what's going on with that animal. And once the market re-enters this range, hold on. Once the market re-enters this range, rejects penetration of this range, re-enter this. The destination, the ultimate destination is the opposite side of this range. The market has reached that side. For all purposes, this trade is over, or has been completed, I must say. Not that being over, but it has been completed. Now, we have the all-time highs as next one. All right. With some stop in between. There is a range here as well. You have a range here. back from a couple years ago, right? A couple years ago here. What is the range here? The market is taking its time. This is the beauty of when the market has these stair steps. The market kind of like stops. There is no stair steps here, for example, right? No stair step here. What the market is doing now, there's nothing. There's nothing that's holding this market, for example. Right? If the market breaks here, there's nothing, absolutely nothing that can hold this market. The daily we have really multiple. I mean, the weakness I can see. I start to see. Market starts to show some weakness in the weekly. Oh, come on. In the weekly time frame. I can see this buying from this trend line here. There's a gap here. And the daily shows, man, can you see 1, 2, 3, 4, 5 gaps, and if we include today gap to this gap, there are going to be 7 gaps in this market. It's just unbelievable, right? Such amount of gaps is just a sign of extreme of a market that has got really emotional. Too much emotions here. This market has been trending higher as well in the daily for 1, 2, 3, 4, could be 5 days today. And the only thing that remains here, on the upper side is this gap here. This gap was partially filled yesterday. The market filled half of this gap yesterday, and market opening, kind of like opening what it is right now, it puts the market really close to close the last gap in this that is in the upper side. After this gap is filled, we basically have nothing here. Now the next reference on the upper side is, for technical trading, right? Traders will see we got this 4808. And this is the adjusted contract here. Range here. Market is exploring about this range. Now we have something really special going on right now. And before going over that, notice what's happening here. Now this is the monthly upside trend. This is the weekly upside trend, and this is the daily upside trend. All time frames are in sync. All time frames are doing the same, are trending higher. Right? The first time frame that shows change is always the daily, and the last time that will show change is always the monthly. All time frames are in sync now. Are they going to keep doing the same? There's no warranty. I personally, this is my opinion. My opinion is that this market is super elongated. Yeah? And the thing that's happening now is we are in the rollover period of the last contract of the year. Yesterday, we still have a really respect, quite a good amount yet of the December contract. Sorry, I apologize for the dog. Um, 1 million here. March contract basically has the regular or the normal volume that usually has. Let's take a look here. You know, this is the volume of the contract, right? When I say 2 millions, that's good volume. I mean, it's not bad, right? 1.2 is really low. This should be good volume here, 2.6 for example, right? There's a lot of hedging going on there. And now this here is December, and this here is March. Notice how it start to dwindle here. It start to go lower and lower. There's a still significant amount on Friday, and Friday also is the first day that March has quite a bit. Right? It jumps from 1 quarter to 1.2 millions, and then has a big jump on Monday, and yesterday kind of like, wow, this goes to what will be normal. Both together 2.8, 3, and that's quite a bit. That's a lot. And now the current contract is just, this is the overnight. I can see the steel. The new contract has quite good. I would say about 500,000 is good. 300 is just normal here. But one point here is the rollover that is happening. Usually at this time, Tuesday, the last week of the current contract. This should be below 500, for example, right? But there is still quite a bit of contrast here. And whatever read I may have of the market, having perspective, doing my homework, whatever read I may have, I always have to put things in context as well, right? Yesterday, I had a short bias yesterday. My bias was to the short side. Also, I was very aware that this week is very weird. Weird things can happen, right? I remember saying at one moment, I'm not going to be. I have decided to be a seller here. When I saw this happening, and this one happening after this day, a day like this, I want to be a seller. I don't want to be a buyer here. I got a couple trades here, and I try a short here, somewhere in here, but when I saw something here, the market, there was signs of weakness all over the place. But when the market couldn't close this distribution here, the market came back into this range a couple times. Once here and another one here, but it just couldn't close. It just wasn't there. That's when I decided, no, this is not. I better just step out, and because the tempo was again terrible tempo yesterday. If if somebody was still short here, at the moment, when H or I happened here, it was clear at this moment. Even, I mean, if I got some type of short here, I coming from halfback here and having this weird, poor low here, also having a weak low here, another weak low here, another weak low here as well. Okay, there was something there, right? There still may have some odds that this market may have some rotation yesterday, but here it was clear that this was a trending day. This is a trending day. If but and the thing here is, because of what happened in the pre-market after CPI, because this break here, and this break here, penetration into this range, just imagine the mind of traders. What were traders thinking? The market has a big break, has a spike. The spike was rejected. Has a big break to the downside, taking the market way into, into the previous day range, way more than halfback. What's the mindset of traders here? This market is to the downside. I also remember saying that I did not see a market to the downside. Value was higher. I guess I say that on A or B. Value was still, it was still early in the day, but value was developing higher. Value was developing higher here. And what I saw was a market to the upside. I may have a trade to the downside that was good, but the market's to the upside. There was a trade against the trend. It worked. I got lucky. It worked. But the day turned out to be a trending day. It wasn't clear, when F took these lows out and was bought kind of like from this high. I guess it was saddle as well. It was saddle, that's why I got this label as saddle. It was bought exactly from saddle to the tick here. That kind of like gives you some second thoughts, right? Make a guess, second guess yourself. But it was a trending day. If you haven't seen that with I, you could see that with J, K, L, M. This is a trending day, and one of the things about trending days is, we don't just fight the trend. We don't fight the trend. Don't go against the trend. If you insist in short the market, you can do it maybe at late in the session when there is some rebalancing. All of this, and notice where this buying comes from, especially this one. And then you have double lows, and then the halfback, and then another halfback, and then another halfback here, right? The structure of this market is really bad here, right? But because of that, there is some rebalance. It tells me who is doing this, who can be behind, and there is always some rebalancing. All these longs will need to sell because they cannot carry positions overnight, and some rebalancing usually happens, and that's when traders finally see something, right? I was shorting the market all day long, and okay, finally I got right. I got the market. I figured out the market, and this happens all the time. When you think finally got the market closes at the upper side, closes at the highs. And the context is, this is the rollover period. We were seeing some really extraordinary, unusual prints at the closing, after the close. Yesterday was another day. This is Tuesday. Yesterday, this is the 8th. This is Friday, I believe. You just Take a look, 20,000, 30,000 contracts here just before the market closed. And yesterday I have another thing, and this is not March contract but December contract, 16,000. This is not one trader that had bought 50 contracts. There's somebody there that has bought, that's bought in the thousands. Now, go, boy, this market is open now. Oh, look at that! I didn't see this. No, it's market again. Another rejection of spike. Another rejection. Another spike being rejected. Very prominent POC. This is extraordinary here. Another mechanical buying here. One tick from this high. What I was saying is, this kind of buying, when it is the lower period, there is a lot of contracts that are going to be executed here, and a lot of weird things happen here. Spike, another. This is again sign of weak market. Also, yesterday volume was low again. Really low volume. We still don't have volume increasing here. Can you see? Low volume here, very low volume overall. And this is the market. This is not the ES. The ES is an index. Remember, gap has been closed. Very mechanical buying there. Right from the gap. Right from yesterday's high. Gaps being closed are also a sign of weakness. This is the last gap being closed. Another high made in the overnight. And today we have FOMC. Guess what we have here? This inventory here is 100% long. All the overnight is 100%. What is the direction of the overnight trade? This overnight trade is aiming to the upside. Gap has been closed. High volume coming here. $13. Is the gap closed? $13.25. I don't know why I have 12 here. Let's 13.25. 13. Okay, let's do that. According to 13.25, this could be okay. Right there. All right, I am going to close YouTube. Let's open Twitter here, right? Let's open Twitter.